Good morning folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade, and welcome to our daily fundamental video analysis. In today's market, what I'm really looking at is the upward trend in the European markets. The investors are very much picking up the momentum where they left off yesterday, because remember, on Wall Street, the Dow Jones closed well over 200 points yesterday. In fact, the gain was nearly 369 points. And the things weren't that different for the Nasdaq index as well, because remember, it is important for me to emphasize the critical importance for the Nasdaq index, because the Nasdaq is a tech-savvy index. It represents the tech rally, and this coronavirus stock market rally has been supported by the tech sector. During the recent retracement, what we have experienced is the tech stocks losing their bravado, and hence we've seen the Nasdaq index moving below its 15-day simple moving average. But as you can see in the chart, the Nasdaq has moved back above the 50-day simple moving average. This is certainly positive for this coronavirus stock market rally. But something which is quite intriguing for me is that now it is the Dow Jones index which is holding on to its gains much better than the S&P and the Nasdaq index. The reason that I'm saying is, if you look at the Dow Jones chart, we can clearly see an upward trend for the last number of days, and the index is well above its 50-day simple moving average. This indicates to me that the Nasdaq, which was the leading index, is no longer the leading index. Of course, this can change because the momentum for the tech stock is a lot more stronger whenever that comes in, and it is likely that the Nasdaq will outpace the other indices in a matter of a day, the moment that we get some more help and more support for the tech stocks. Right now, we are not seeing that. This is despite the fact the Tesla stock, which is not your usual tech stock, but it surged well over 10% yesterday. Now, what about the fundamentals? What are the key economic metrics which are really moving the markets? For traders and investors, it is all about the FOMC meeting, which is taking place tomorrow. And the anticipation is that the Fed is going to keep its monetary policy stance immensely dovish. The Fed is in no rush to increase the interest rate, especially after it introduced a new monetary policy chapter to tackle inflation, which means, in very simple terms, interest rates are likely to remain lower and for longer. So that is supposed to be very positive for the US economy and for this economic recovery that we are experiencing. On the other side, the geopolitical tensions between the US and China over TikTok, they continue to simmer in the background, and US is still pushing against China on a number of different events, a number of different avenues, such as what happened with cotton imports and with several other things at the same time as well. But what is quite important for the markets is the price action for the gold price. Why? Because gold price has also crossed above its 50-day simple moving average. As you can see in the chart, this move can easily lead the price from its current level to all the way to 2015 price level, or perhaps at least 1993 price mark. That is where I'm looking at. That's all for today, and I'll see you guys next time.